So good afternoon, everybody, and thank you for joining us today. Welcome to our unique panel, Banks versus FinTech from the risk management point of view. My name is Lia Tsur. I am honored to host the panel today. I'm the CEO of L3 Risk Management, a boutique consulting firm providing high-end advisory solutions, specializing in the operational risk management, business continuity plan, fraud prevention, and cyber risk management in the business processes. I have worked in the financial industry for 20 years, all of which in the risk management area, including as a risk manager in Israeli banks. My guests today are the top risk managers in the financial sector. I want to begin with a quick introduction of our panel members so we could all get to know them. Ifat, Oren, Ofer, Yaki, and Keren, I'd like you to introduce yourself. Make sure to mention your name, job description, and a little bit about your professional background. So ladies first, right? Let's start with you, Karen. Please go ahead.
Okay, so hi everyone, and it's a pleasure to be here. So thank you, Leah, for inviting me to join this panel with all these wonderful people here. So I am the CEO and founder of Payments OP, which is an advisory and managed services company. Our expertise is actually end-to-end payment operation worldwide for online businesses. And we handle everything starting, the commercial side, the risk management, the fraud prevention, the compliance, and also different payment solution providers worldwide. And we do projects with different companies, with banks, with startups, with corporates, whoever is processing online, then we love to work with them. And also, I can tell you that I'm one of the founders of the FinTech Ladies community, which is a community that was founded a year and a half ago for women in finance and payments. And this was enforced to empower women in these industries to network, to cooperate, and to do wonderful things together. So this is me.
Thank you very much. So let's move to Ifat.
Thank you for having me here. It's a big respect for me. I'm Ifat. I'm a GRC manager at Next Insurance. It's a unicorn in the insurance tech. I came from different industries. I'm professional in cybersecurity risks, and the GRC I'm doing is around that domain. And I came from different industries, governmental, health industries, finance, obviously, and now I'm in the FinTech area. And I'm happy to be here, as I said.
Thank you, Ifat. So we will move to Oren. Please, Oren, go ahead.
Hi, everybody. Pleasure to be here. And thank you for the invitation. I'm Oren, CISO and DPO of CredOrax Group. CredOrax is an acquiring bank providing cross-border smart acquiring services to global merchants and payment service providers. In my previous role, I was a CISO deputy in Discount Bank, which is the third bank in Israel. And it's a pleasure to be here again.
Thank you, Oren. Ofer.
Hi, everyone. Yes, thank you very much, Leah. Hi, everyone. I'm really excited to participate in this really amazing forum. My name is Ofer Golan. I'm the head of risk at Payment by Wix. Wix is leading the way with the cloud-based website development platform for over 180 million users around the world. And in my previous role, I was the head of fraud prevention, internal fraud, external fraud from end to end. And before that, I was chief compliance officer for one of three major companies, credit card companies in Israel. A lot of experience with regulations, compliance, risk management for several years.
Okay, thank you, Ofer. So last but not least, Yaki, go ahead. You're on mute, Yaki. Unmute yourself. Thank you.
Thanks. So hi, my name is Yaki, and it's a pleasure to be here, and thanks for having me. I'm currently the Chief Risk and Compliance Officer here at CoinMama. which is an online platform that allows customers to buy cryptocurrency for fiat easily. Previously, I've been serving also as a risk manager and as a compliance chief compliance officer. Actually, in the same organization that Ofer mentioned, I've replaced him, and I'm happy to be here.
Thank you, Yaki. So let's start. There is no doubt that banks' regulations framework is extremely different from the fintech's one. Karen, do you agree with this determination? Is it justified in your eyes?
Well, I think like in general, I think the word bank is very wide and commonly used to describe different types of organization, different types of activities. And if you look today, I think at the payment market, at the processing market, then you can see like businesses that are doing classical banking, like that we usually call banks. And on the other side, you can see organizations that are doing different type of transactions like financial transactions and technology, which we usually call the fintech. So I think today we have a lot of fintech institutions that are doing kind of banking activity. And there I relate to, I don't know, marketplaces, prepaid issuers, digital wallets, payment solution providers, and a lot of other organizations that are acting not as banks, but are operating in these, in these verticals as well. So I can tell you, before I will tell you how I look at it, I will tell you some kind of a story from previous customer that we used to work with in Israel. It's a very, very big marketplace, which everyone here are familiar with, but I cannot say the name due to privacy and all this, regulation stuff.
Yeah.
But when I first came to meet them, it was, I think, 4 years ago. There was like initial organization that were working like that. So I was coming to one of the meetings and some of the management joined us, and I told them, listen guys, you are a bank. And they were kind of looking at me like
Shocked. Yeah.
Actually shocked. And like, what are you saying exactly? We're not a bank. We don't want to be a bank. We don't consider ourselves like that, and we definitely don't like what you said. So it was kind of not a very good start, I should say. But eventually we did a very nice project together until today. But I told them, listen, guys, you are a marketplace. So in essence, you are taking transactions and money from your buyers. Then you hold it because you want to have some securities. And then you pay these funds to your sellers. So this is kind of a banking, situation here or environment, which you need to supervise, to handle and to monitor properly. So this is why I tell you, you are a bank. You're not just a platform, which they all love to, to treat themselves like that. And then it took us, I think, maybe 1.5 years until they told me, you remember this time that you entered the meeting and you said you're a bank, and it was like a very bad entrance to a meeting. Then today we understand what you said. And this is why they changed, well, not just because of me, because they evolved and they understood that regulation is not something scary, it's something that can actually leverage their activity worldwide. And today they are regulated and they are operating really, really nice and growing nicely. So I'm thinking like if I take the banks and I take the fintech, and it's like it's not two sides of the same coin. It's like there isn't really any side. It just, I think, is the way how you look at it. Because if you're a bank, like doing regulation, it's in your DNA.
Mm-hmm.
So you have to do that. You're meant to do that because you have to survive. It protects you from your competitors. It puts you in a framework of controls and monitoring. So it gives you a lot of added value. And all the people that are working there are kind of familiar with this approach. Mm-hmm. But when you are a fintech company, then the regulation is kind of a challenge. You look at it like a challenge because your focus is actually on the customer acquisition, on the customer experience, on the delivery, on the product. And then if you need to also take care of the regulation, that it's something that you do on top of that. Like it's not the main thing that drives you ahead. So I think this is the real challenge, like to see how you still keep the experience very good and frictionless, but do that within compliance, as we say.
Very interesting, a very good example. Thank you, Karen. My next question goes both to Oren and Ofer. Can you please tell us about your experience of transition from working in a conservative financial institution to working in a modern fintech company? What advantages and disadvantages have you noticed in terms of risk management? Oren, let's start with you.
Okay, well, in my eyes, the best advantage was the cycle time. In my previous role at Discount Bank, it takes us 6 months on average to deploy any security project for any type of risk. Today in a fintech company, it takes a few weeks to a few minutes in some cases. So this is the most incredible thing for me. And that thanks to much simple company structure and much less internal political issues. So this is the main advantage in my eyes to move to a fintech from a bank. And another big advantage is the size that allows you to control everything much better and to be much effective at your day-to-day job. Imagine to yourself that you can know all your company employees by their names. You can even know your servers by their DNS names and the IPs. So it cannot be achieved in a large enterprise. It's just it can be. And regarding the disadvantages, it's really hard to find. I know that some of my colleagues love very much to manage big teams. So in fintech, it is much more about collaboration and make impact on your colleagues than to manage a big teams. So yes, for those who looks to manage a big teams, it can be a big disadvantage.
Wonderful answer. Simple and flexible. Thank you. Ofer, the same question.
Yes, sure. Thank you. I think in general, the banking industry certainly shares some necessary skills beneficial for fintechs. Knowledge of how risk and regulatory standards could impact the business is highly valued. For risk management managers, I think it's very important to remember that customer enablement and customers' trust is top priority. And that risk management is an enabler to support growth and reduce merchant friction to a minimum while reducing exposure to financial losses. The advantage I see can be actually building talented team and infrastructure from an early stage the right way and create huge impact by giving the user the service and functionality he really needs. As we all know, AI and machine learning continue to be disruptive technology, both B2B and B2C applications, recognize pattern in data and automate separate tasks, including algorithms that detect fraud, chatbots to answer customers' questions and create cutting-edge user experience by using data analytics. We need that to support accelerate digital adoption of technology since the coronavirus pandemic began, especially for many consumers that are doing so for the very first time. Maybe another advantage I can see is the productivity gains from much more agile, laser sharp focus module, which mean you focus on high impact area early on. And by that you can get good payback curve that is different from what I used to have in large technology platforms. For example, for the banks, data and infrastructure are one of their barriers. The challenge that some of us may face is to implement culture, explain the benefits coming from implementing risk management methodologies, and convince senior management to invest the necessary resources to support that. But I must say that the opportunity to have a major role in revolutionized product or service is really, really amazing.
Okay, I see the smile on your face and on Oren's face, and I'm wondering if I want to go to work also in a fintech company. So back to you, Oren. 2 weeks ago, we had a very interesting conversation. We both used to work at Discount Bank, and you told me about the different culture point of view you had experienced since working at Credirax. And you used a wonderful term while saying it. You said the transaction is the queen. Can you explain more what you meant by using this expression?
Yes, of course. So when I started my position in Credirax, I did a quick business impact analysis, the BIA that you always done in a discount bank, and to recognize the main business workflows, to plan our security risk assessments, to support these business workflows. So my first finding was that the payment transaction is the queen. It's totally the queen. Any high availability effort, any maintenance decisions, and even any company project consider the effect on our transaction flow, because this is the main business vertical and the main issue that all our IT guys and the product and everybody is thinking about and take it into their considerations. So in my opinion, you can start to build your security plan only when you can see the main goal of your business continuity plan. So once you understand the business continuity plan, you can now support this process with all your security controls, security policies, and all other missions. Before that, you just doing like compliance or best practice without investing the right point your time and your budget, resources, and everything is a CISO.
Thank you, Oren. Very interesting. Ifat, what do you think about Oren's expression? Do you agree that the transaction is the queen?
First, let me say that I love Oren's way to describe things. He has the Oren way, and that's a way to admire.
Totally agree with you.
Yeah, but let me continue by saying, first of all, I agree, but I agree for that in Credirax, because transaction in Credirax is the main issue. That's, if I may say so, that's the product, that's what they deliver. So obviously there, the transaction is the queen, the king, whatever you want to call it.
Queen,
right?
Of course, queen.
Of course, queen, right. But there are guys here, and I want to be politically correct, and let me continue by saying that. Now, transaction is an image. That's an image for two servers talking to each other, and in each company, each product, each industry, it can be a different transaction or different image, different server to server that are doing any kind of communication that we want to protect. And in each organization, when we want to take a risk-based approach, and we want, as Oren said before, that's the BIA, we should discover what is our queen, what is our king. In the industry, we call it the crown jewel. And that's where we are coming from. So in short, if I want to summarize my answer, yes, yeah. I agree.
Okay, do you want to say something about the crown jewels? Because it's very important issue in your field in the cybersecurity. What you mean by the crown jewel?
Yeah, so I will obviously say it when we go on in the discussion. So I'm sorry that I will repeat myself, but that's something we should, everyone here should remember. There is no risk management or cyber defense or any controls if there is no business, right? Mm-hmm. So we should be very well known with the business in our company, if it's a bank and if it's a fintech. So this is not a bank versus fintech issue. That's a general thing to say, that we should know the business. We should know what's important for us. And that's our crown jewel, right? Once we know our crown jewel, we know how to have all mitigation, all controls, everything we do, where we want to put the money. The quick wins should be focused on that areas, on that domains, on what we are here to do. Okay, and
yeah, totally agree, and thank you very much, Ifat. Yaki, In your opinion, what are the problems in the fintech ecosystem from the risk management point of view? Everybody is talking about the lack or the weakness of the fintech regulation compared to the bank's regulation. What do you think are the advantages and the disadvantages?
Well, diagnosing the problems in the fintech ecosystem that in that aspect sounds too pretentious. So I'd like to maybe to refer to some advantages and disadvantages. I think I'll start with a disadvantage. I think that, generally speaking, I think that everyone in this panel will agree. The importance of proper risk management is usually underestimated. It only becomes apparent, when major risk materialize. And the whole idea of risk management is, think of risk ahead and get yourself prepared. And obviously, risk management is embedded in every decision-making processes in every company, but not a lot of companies, and fintechs are included, have a professional risk management function on board. And I mean someone whose job is to continuously oversee risk at the enterprise level, not in a single process. Ask the irritating questions, sometimes even complicating the product, stuff like that. But always take the the forward-looking, what can go wrong approach. And I think it's a disadvantage, in two aspects. One is, after all, fintechs deals at the end of the day with customer funds, and that kind of activity, that kind of responsibility cannot go along without any proper risk management, because people will get hurt. And we see this happens every day.
Every day we see it. Yeah.
Exactly. I think the second aspect is for the fintechs themselves, because sometimes it makes sense. I'll put it in a different way. Sometimes taking the right risk management consideration when building a product from scratch may prolong the process, make it a little more expensive. But still, sometimes it's when you look at the long term, it's cheaper and more efficient to do that.
But more safe. More expensive, yeah. But more safe, yeah.
Yeah, but when regulation will kick in, and it will kick in, then you'll have to do it all over again. You'll have to break your product and rebuild it the way that regulation wants you to build it. So sometimes it makes sense to put that extra effort up front and do things the right way. I think the advantages are that on one hand, fintechs must be dynamic, creative, competitive, and experimental. And overregulation can sterilize these kind of traits. For example, in my opinion, there is no room for the separation between the line of defense which exists in the adequate risk management methodologies.
There is no place, in your opinion?
I think that in fintechs, it's not realistic. There is no economic justification for that. And, especially when fintechs are unprofitable and they build themselves, if risks are going to materialize, it's them getting hurt. It's not customers, at least in the beginning. And it's not very uncommon to see in fintechs, the second line of defense, assuming there is one, having also responsibilities and executive.
It's a very important sentence, Yaki, assuming there is one. This is one of the problems.
Well, I'm here and our company has one. And yeah. If I may say, I think, regarding what you just said, that for me, a fintech company that doesn't have to, to hold the risk management function by regulation, but choose to do so, it says something about the company. And if I'm going back to what I said, I think that, in that way, it is an advantage, because that allows fintechs that head start that they need in order to, build themselves. If they have to have a second different line of defense that whose only job is to set policies and conduct controls to make sure that the company follows these policies, they won't survive. It's not feasible at the early stages.
Okay, thank you, Yaki. Oren, the same question goes to you. You remember the question? You muted, yeah, thank you.
No, I'm not.
Now you're not, yeah.
So yes, I remember the question, and I understand why it can look like that from outside, but today, when I saw many fintech companies, I can approve that the regulation compliance and the risk, I think, can be even better than in a fintech company than in a large bank. And I will give you one example, a good example in a few sentences. I'm totally sure that it is all about the company attitude issue, and the attitude is everything. Because when the company, the management, wants to fail, and the CIO and the CISO are the same guy and are the same person, so it all starts with a conflict of interest.
Mm-hmm.
The conflict of interest is everything, is the basic for any good and a big failure at the area of security, the risk, and the compliance too. But for just to show you from another side, one of the mitigation that can be done much better in fintech, I want to give you an example about GDPR PII issue. One of my colleagues is a DPO in a big enterprise, told me that he has a dedicated team to handle GDPR consents. Okay, so it's a risk, and there is a regulation too, and you need to handle it. And he has a big team to handle it with many internal system owners and via many different collaboration platforms, and based on many internal procedures how they need to handle these concerns. So it's, from a first glance, it will looks like there is no chance that fintech startup like us can handle in such, let's say, a professional way when it comes to PII data. But I think this is the main mistake, because the many times thoughts are only about the invested resources. And in reality, there can be much easier and even better solutions with low resources to comply with the same regulation requirement. It starts with it starts when you understand how to take advantage and maximize your company size. So maybe we are smaller, but we can be much faster and even much cheaper in our solution. So in our case, in Credorac's case, we take it in 3 steps, quick compliance changes, and we do everything on the same collaboration process, and we have automated flow for all these GDPR consents. So when you take it and you do it so fast, all just for example, I can give you the legal process that we have done. We decided to have a crystal clear legal policy with a PII liability definitions. So things like this, to have a policy with crystal clear policy with every liability in Discount Bank, it's like 1 year project. Only this subtask in our mission. In our case, it's 2 or maybe 3 different discussions, and then you summarize everything, and it's done. So this is the take advantage of your size. But again, if you don't have the attitude to do so, and you don't have the knowledge, you will be like you said, you will be one of these fintechs that don't understand that they are bank, and and they don't have even the role. It's not about the knowledge; it's about the role to deal with these issues. But if you do have it, and you like start this process, you can do it much better than other big other banks.
Okay, it sounds like a win-win situation, and the advantage of being small. Yeah, I understand you. I used to work also in Bank. It's one of the smallest Israeli banks. So my next question is both to Ofer and Karen. Facebook had to cancel its outstanding announcement of its cryptocurrency issuance after the G7 countries announced that they are stopping it. And the Ant Group's IPO had been suspended by the regulation after the Chinese official had said, and I'm quoting, the company did not meet certain regulatory and disclosure requirements. Perhaps the regulators and fintech giants, or the giants companies that want to enter to the fintech industry, are in different zones. Karen, let's start with you. What are your thoughts?
Okay, so I think, well, it was well covered, I say, in everywhere, like everywhere. So everyone are quite familiar with the facts. I think that the greatest concern always when it comes to these giant companies with a captive audience, if I may say, then that there is a new coin or a new method of payment that will lead to some kind of instability, like a monetary instability, and also always we have the fear of the anti-money laundering that can come along with that, with people that may abuse it or misuse it, or and also the political and economical power of these companies is always a great fear with everyone, including the regulators. I think that for Libra, which I think will be called TM, I think for them they already had like a very minor setbacks, or not minor, but a few setbacks with this whenever they started it in 2019. So they still haven't launched it by now, and they keep changing the frame, and they keep changing how the coin will look like. And also they have some dropouts from members that were supporting this, like PayPal and Visa and MasterCard and Stripe and many more that dropped from this. I think that if they will not address eventually all the relevant, legal regulation and oversight controls that they need, that they won't be able to actually go along with this move. So I think the real problem may be that a part of the reason that the regulators hold this type of growth for these companies and many others, is that they have some vagueness around their positioning and about the business models, because these are technology companies that are working in the financial solutions. So it's a mix that someone needs to figure out what to do with it.
A mix or a Wix?
A mix or a Wix. Well, Wix is also a type of
Offer is next.
business that Ofer will explain more.
Yeah.
So I think these companies have a rapid growth, but when they began, they experienced this growth, and they have a kind of a loose or maybe uncertain environment of regulation. But it makes them able to grow very fast and to evolve because they work in this environment, which is not very highly regulated. But then when they are becoming very big, they get the attention of the regulators. And I feel that even today in 2020, the regulation authorities, they're still trying to actually clarify the relationship between the traditional banks and the fintech companies. And they don't know yet how to treat them properly, because the market runs very quickly, but the regulation is a few steps behind it, because this is the way, it's just the way it is. And I think that, well, personally, I really like this dialogue between the two bodies, like the two sides that we discuss here in this panel, because I feel that this dialogue is really crucial, and eventually it will bring us to the regulation landscape that we need for these fintech companies to actually thrive and not to be limited and hold back.
Okay, interesting. Ofer, same question goes to you.
In my opinion, I think the gap stems from potential risk of loss of the stability of traditional financial institutions. Actually, I think there is a miss of opportunity to produce true competitiveness. The requirements for regulation imposed on fintechs should be tailored to the fintech's environment, lean and adapted to the business activity. There is a room for systematic creation of structured and defined risk management, but again, lean and adapted to the activity. In my opinion, as long as it is not about managing public funds, such as deposits, there is no reason not to adjust the requirements and thus promote innovation and speed. However, I still support requirements when it comes to consumer protection with regard to the prevention of money laundering, fraud, protection of privacy, and etc. I think regulatory arbitrage should be avoided.
Okay, okay. So all of this leads me to my next question. How do you implement risk management culture in an organization that emphasizes innovation and freedom as part of its essence, assets, and soul? If at, let's start with you. What do you think? You're muted.
You know, that's the quote of 2020, right?
The quote of 2020? What do you mean?
You're muted.
You're muted. That's the quote of 2020.
Ah,
Yeah.
okay. Nice. No, I didn't know.
Yeah. Anyway, I promised before that I will repeat my message, and good that I did that, because I'm going to repeat it again. But I will try to use different words for it, right? Risk management is going with business and not vice versa. Okay, there is no, we should feed ourselves to the business. So if the business is dynamic with high speed pace and certain language, certain wording in the business, that's what the risk management should be like. So for me, coming into Next Insurance now, and every small company that risk management is entering into should be dynamic, should be using the right words, should be using the right tools. You don't want tools that are, being a burden on the business. You want something that they can actually work with and do it quick and go to the business, because if they will wait, they won't be existing, right? The competitors will bury them underneath, and they won't be here. So I want to keep my answer. I'm sorry. I want to keep my answer very simple. That's the way you should implement the risk management. Go with the business in the same pace. Run with them. If they are running, you should run alongside and do whatever you want to do. I know it's process driven. Obviously, that's the first word I'm entering into. I'm entering into my company. Process. I'm not talking about regulator now. I'm talking about process. So I'm doing that. I'm building that, right? And I'm trying to be very easy at the beginning, and just be there, support, listen to what they say, not stop them.
But sometimes there are situations that you need to stop them, maybe for a little while, but something you see a very high risk.
Yeah, right. You are very right, but you should be very careful if you are there or not, okay? And not, because, we tend to be very cautious, and we want to stop everything, and we want to process that, right?
This is our job, yeah.
Yeah, but now I keep carefully when I should be like that and when not, okay? And I'm not stopping every time just for me to feel comfortable. Sometimes I'm not comfortable, and I'm still there. I'm not stopping anyone. I'm still there, and then I'm trying to work for it, because the risk will happen someday, but we can take time to actually have a plan and build it, but we don't have to wait with the business, right? We can do the business and then implement the controls according to a plan.
I agree with you. Even when working in a bank, I remind myself from time to time that my salary comes from the bank profits and from the business. And I think every risk manager needs to remind himself that his salary comes from the profits.
Exactly. So, and I would like to tell from personal experience. I used to lead the implementation of ISO 272299. That's the health ISO, health data ISO.
Okay.
And that was after all the big hospitals in Israel adopted that according to the Ministry of Health in Israel.
Mm-hmm.
And then we got into the supply chain, right? The supply chain is a very common word we hear now because of all the cyber attacks and everything.
Yeah.
So right after the regulator finished with asking from the hospitals and big organizations to be compliant with ISO, they asked all the third parties to also be compliant with it. And then you come to a lab that give services to Ichilov Hospital, which is a very big hospital in Israel, or Hadassah Hospital, which is a very big hospital in Israel also. And you ask them to do everything that the hospital just implemented.
Yeah.
And then they keep reminding you, we are a small business, right?
Mm-hmm.
And Hadassah is only one of our customers. We can't put all the effort or controls they have put in place, right?
Voice
And
doesn't fit all. Yeah.
Yeah. So we need to remember that. Also, the auditors should remember that, and the regulators should remember that, right?
Okay. Thank you, Ifat. Thank you very much. Jackie, the same question. You are unmuted. No, just kidding.
Yeah, I think we can discuss this topic alone for a full session, and I totally agree with Ifat. I would say I'll try to focus, I think, on three aspects. One is, before that, I would like to say something else. Sometimes as a risk manager in the regulated industry, you're doing things you don't really believe in, professionally,
Mm-hmm.
just because you know that this is what the regulator expects you to do. And I can say it now, I'm not in the banking industry.
Mm-hmm.
And you don't really believe that these actions will benefit the company in the sense of risk management. For example, no one's gonna embrace risk management principle by going on a 1 hour training for each year. That's not something that is practically working. You do that just for audit purposes, so you can check this, tick the checkbox and say, yeah, I did it. I think that risk officers or risk management functions in the fintech industry must provide value. As we discussed before, there is no, banks must have risk managers on board. Fintechs don't currently. And if a risk officer or risk manager cannot prove that he's providing value to the fintech, then
Added value, yeah.
There's no justification for their existence there,
Yeah.
nor for any risk management implementation. So I think it's all about, as Ifat says, I'll try to put it in different words, it's all about the risk that you take. The risk that you encourage the company to take, not the ones that you avoid. Although they are important as well, of course, but you have to make it relevant, not theoretical.
Yeah.
I like to quantify the risk, because that's a language that management and CEOs usually like and understand, and makes it very easy to discuss, even when it's not very intuitive, like in compliance risk.
Okay.
The other aspect, I think you should always work top down. If you can, you should have senior management and the CEO on board with risk management, and it's okay for the management, and it also corresponds with what you asked before regarding stopping the company sometimes. So I think it's okay for the management to perceive risk management as breaks. But if you can make them understand that, or believe that these are the brakes that gives you the freedom to accelerate, and not only the gas pedal, then your job there is done. I mean, these perception will strike roots in their surroundings and in their employees, and it's very hard thing to achieve. And it corresponds with the first item I refer to, which is bring value. And I think lastly, it should also be a bottom-up approach. And in that aspect, working in fintech compared to a big company is a huge, huge advantage. It's very hard to get to, I don't know, hundreds or thousands of employees, but it's very easy to get, to 50 employees. You should be creative. You should make a personal impact. You should encourage.
It's very important.
Yeah, and it's very, and it's not that difficult. I mean, in a small company, which also has, startup culture. Like you can use happy hours to discuss risk management.
Risk management happy hour, yeah.
Yeah, gamify it. Things that will, will sink in people's conscience and will make a difference.
Yaki, I have this dream to have a gamifying application for risk management to build a map. This is my dream. Maybe someday I will achieve it. But yeah, I totally agree. And before we continue, Karen, maybe you have anything to add for this?
Yes, absolutely. First, I want to say I totally agree, like with both Tifat and Yaki. And I think that, if you don't want to have any risk, then don't have any transaction or activity. So this is the very safest way to have a risk-free, business. But yes, absolutely. I think the risk managers are the gatekeepers of the organization. So really, it's a very frustrating position because you feel like it's a very polished one. So it's very suitable for me. Like you do everything for them, and then they still think that you stop too many activities or something like that. So as Yaki said, if the organization feels that you bring added value by doing that, then you really did it properly. And you can do that easily today because you have a lot of systems that can help you to do this properly. So this is why I think the solution is actually a combination of technology and data and experts that are working on this data and technology. Because today, if, like I said, these organizations are looking for a great customer acquisition or a great customer experience process. So if you can kind of harness the technology that you have and get yourself great KYC and KYB tools to identify your customers and to have an automatic onboarding, if you can have a lot of risk management and fraud prevention tools, like on the fly, like when the transactions is actually processed, then you can easily filter the risky transactions and you can let the green ones, as we call them, to go through. So this is why
to have effective risk management, of course.
Yeah, you can work very, very effectively. So if these organizations in the fintech are actually have some kind of a fear from the risk management processes, then you can easily show them that it's even better for the processes, because then you can actually screen everything online. You can do that automatically. And then you have the good customers inside, the good transactions inside. And today we have so many tools out there that, we just have to pick them.
I agree, and we need to move on. So we cannot have this panel without speaking about Wirecard, right? Why, on not such bright morning, we woke up to the shocking news and read all over the media about the biggest Germany and one of the biggest European clearinghouse, which had announced that $2 billion have vanished from its banking account. Now, as the former head of fraud and embezzlement risk manager in one of the biggest Israeli banking group, I have to say that in my professional opinion, there is no excuse and there can be no explanation for this insane risk failure event. I must say they most likely did not have effective and basic control processes over their money activities for many years. Let me tell you, $2 billion cannot suddenly vanish. This is completely a neglection of a lack of basic risk management and controls. Since this topic is connected to the internal threat, and the internal threat is an important category of the cybersecurity and the cyber risk management, I'd like to direct my next question to our panel cyber expert. Oren, I'd like to start with you. According to public information, what exactly happened there, and how can we make sure, as gatekeepers, that our organization prevents such incidents from reoccurring?
Yeah, so you already know my thoughts about it. In that particular case, as it published, it's like it seems like the management themselves involved in this fraud issue. And I think this is a great case to define the CISO responsibilities. And I know that we are disagree about it, but internal threats should be mitigated by all the security controls, access controls, authorization management, data leakage prevention, audit trail, and others like 4 or even 6 size principles. But again, all these controls should ensure only one thing: the right person will able to access to the right data and edit and do other things as part of his specific role. And that's all. Now, when it comes to a situation when this person is reporting inaccurate data, let's say only inaccurate, many times I hear from non-security people that says this is data integrity issue. So it's a part of security, right? Because data integrity, the data is not right.
Yeah.
Okay, so data integrity risk in security using to implement controls such as unauthorized access, lack of auditing. So maybe none of us will know who access to this data and who edit this file. So and other things like data tampering attack vectors for to recognize ransomware attack at its beginning. So all this is the data integrity for security. It is not about a legit access of a legit person to a legit file and then put inside some lights. Okay, to prevent false reports like that. It is about HR screening process at the beginning for this guy. And again, when we are talking about the management, it won't solve it either. So the right entity to handle this specific threat is only the authorities and the regulations, in my point of view. For example, the regulation can require for 4 eyes approval, and then the CISO must implement this 4 eyes approval process by the best practice tools and other products. But still, it starts with the regulation. And if they ask for 4 eyes approvals, and these 4 eyes, I mean 2 people, decided to make a fraud, I think that you can agree with me that it will work. Okay, they will succeed in that case. And so it starts with the authorities and even ends with the authorities in mind.
But you need to make sure that even 4 eyes, even 2 people cannot vanish $2 billion. But we are coming to our end of the panel. So I want to ask you, since all of you moved, had the transition, experienced the transition from finance to fintech, I'd like you all to give us 2 or 3 tips on how to make a good transition, something like to do and not to do this. So start with you, Ofer.
Thank you, Lia. First and foremost, I think we should not underestimate our value of the industry framework as a foundation of transitioning to fintech. This is an invaluable experience that we gain. We know how the financial institutions works. We know what is the requirement from the regulatory perspective. We have a lot of knowledge, which is very, very useful. First, I suggest you to seek advisory and mentorship. By networking with next generation leaders, you gain more self-awareness to stimulate your personal growth and real insights to the next big things in the fintech industry. In addition, identify a fintech company not only by what they do currently, but also their future plans. Make sure you ask any potential employers what their intentions, what they are planning for the future, and ask yourself if it seems realistic And are they in line with your own personal plan?
Very good advisory. Thank you. Yaki, just in 1 minute, please.
Sure. Yeah. So I think the first step would be take responsibility. I think it's always the case in a new place, in a new job. But transitioning from traditional banking to fintech allows you to design your role and position. And sometimes, there's always a shortage in working hands. You can design your role to include some aspects that wouldn't be feasible in the traditional banking. And the second tip would be ask questions. Don't be neither too shy or too proud to ask anyone anything. It's a new place. There's a lot you don't know, and the best thing and fastest way to learn is just ask questions.
Yeah, I agree with you. And in fact, yeah. Thank you.
Yeah, I was hoping you would put me after Ofer, and then I would say adopt the tips you are getting, and then I will ask Ofer if he wants to be my mentor.
Yeah,
right?
of course.
Yeah,
Ofer is a wonderful mentor. I need to say to you all, Ofer is a wonderful mentor.
Yeah. So really, I was serious, but really adopt the tips that you are getting, and know that you can always learn from everybody. And I'm sorry for, it sounds like I'm repeating Yaki, but I need to repeat him.
But you have only 1 minute for this.
Yeah, and in this 1 minute, I would say that out of what Yaki said, I'm with him because I wanted to say it, and he well said it before me. Asking questions. It's all about asking questions. Okay, if we'll assume we are knowing, we won't know. That's what I'm saying to my kids also. And I think we have to remember that risk management is something we do every day, all day. When we cross the street, when we take decisions, big decisions, little decisions. So we have to know that it's all involving around the same principles. And it's as simple as it is, right? If we keep it simple, it will be the best.
I will add to you, instead, I think that our profession is to know how to ask the questions, how to ask the right questions. And so I totally agree with you and Yaki. And Oren, 1 minute left.
1 minute, one sentence. Just find or adopt a knowledge management platform with the easiest search feature. And continue get more knowledge about your business.
Thank you. And Keren?
I want to add to all these great things that were already said, that, in short, just remember your background and always lean on the basic principles for, risk management, because it always works. In each industry, in each business, it always works. And I think do not surrender kind of to the, this fintech environment that you are working at, because eventually they are very focused on performance. But if you stay stubborn enough and creative enough, I think that that you can manage to do everything like you want to do it.
Wonderful tip, wonderful tip. Thank you, our audience, for watching us. Thank you,
our can you allow me to say one last thing? Because I want to say something because of what Keren said in the beginning about the regulators, that in banking, regulators let you defend you from the competitors. I think that if a regulator is now hearing us, he should also adopt the change in the pace and also adopt changes in the way he's regulating, and take competition as part of the business now, and be agile and be more flexible. So I think there should also be conclusion for his side.
Yeah, of course. Regulators, do you hear that? Be agile, be flexible, be advanced. So thank you. Thank you to our audience for watching us. Thank you, my panel members, for being here with me. And remember that our highest risk in life is not taking any risk. Okay. Thank you very much. Bye-bye.
Thank you.
Bye.
Bye-bye.
Thank you.